All right, let's talk investing. Today, we're going to demystify two of the most popular, most powerful tools out there, mutual funds and ETFs. We're going to break down what they are, how they're different, and really, how you can use them to build your wealth.
So let me ask you a question. What if I told you that you could own a piece of hundreds of companies? I mean, basically the whole stock market, with just one click. Sounds way too easy to be true, right? Well, it's totally possible, and that's the real magic behind what we're talking about today.
Okay, first up, the classic mutual fund. I want you to think of this like a giant investment buffet. Seriously, instead of you having to run around picking every single stock or bond, there's a professional chef, the fund manager, who puts together this amazing diversified spread for you. They just pool money from tons of investors like you and me, which makes professional management super accessible right from the get-go. So what about an ETF, an exchange-traded fund? Well, if the mutual fund is the whole buffet, an ETF is like buying one single share of that entire buffet. And here is the absolute game changer. You can buy or sell that share anytime the market is open, just like a regular stock. That gives you this incredible flexibility and day-to-day control.
The showdown. Key differences. All right, so we've got two fantastic options here, but how do they actually stack up against each other? Let's dive into the details that'll help you figure out which one is the right fit for you and your goals. Okay, this is where it gets really interesting. First, look at trading. This is a big one. Mutual funds, they get priced only once a day after the market closes at what's called the net asset value, or NAV. But ETFs, you can trade them all day long, just like you would a stock. Then there's cost. ETFs, you'll notice, often have lower fees. And trust me, those small differences in cost can add up to a huge deal over time. And management. Most mutual funds are actively trying to beat the market, while most ETFs just passively track an index, like the Nifty 50. And finally, transparency. With an ETF, you know exactly what you own every single day.
So how did we get here? I mean, these things haven't been around forever. Mutual funds really started to become popular here in India back in the 90s, but the whole investing world was shaken up in the early 90s when the first big ETF, you might have heard of it, SPY, launched in the US. And now, fast forward to today, and the trend in India is crystal clear. More and more investors are choosing these lower-cost, super flexible ETFs and passive funds.
The playbook. How to choose your fund. Okay, so that's the what and the why. Now for the how. How do you actually pick the right fund for you? Let's get practical and build a simple checklist.
This is it, your personal 4-point checklist to cut right through all the noise. Step 1, check the costs. That expense ratio is absolutely crucial. Lower is almost always better for your long-term growth. 2, what's the strategy? Is it trying to be a hero and beat the market, or is it just tracking it? 3, know what's under the hood. What does the fund actually own? And number 4, the most important one, does it actually fit your goals, your comfort with risk, and your timeline? This checklist right here is your secret weapon. All right, time for the really fun part, the hot list, today's investment trends in India. Enough of the theory, let's look at where the action is right now. What's been making waves in the Indian market? Let's go. Okay, 84%. Just let that number sink in for a second. What on earth could possibly deliver a return like that? And there's your answer, silver. That incredible return, it came from top-performing silver ETFs during a recent commodity boom. It just goes to show when a theme gets hot, the returns can be absolutely wild, and ETFs give you a way to get really precise exposure to these kinds of trends. Okay, how about this one? 23%. It's not 84, but hey, that is a fantastic return by any measure. But here's the kicker, that 23%, that was in just 6 months. And it came from top-performing mutual funds in the defense sector. This shows you how sectoral funds can really catch fire when one part of the economy is booming. But, and this is super important to remember, with that kind of potential reward comes a whole lot more risk. So, does this mean everyone's just chasing these flashy trends? Not quite. Take a look here. Yeah, precious metals and sectoral funds are definitely popular. But look at that huge slice that's still dedicated to broad index funds. It tells you that even though thematic bets are exciting, for a lot of smart investors, a solid foundation built on the whole market is still the core of their strategy. And we are not talking about small change here. The scale of this shift is massive. India's gold ETF's assets under management recently hit a record $10 billion. This isn't some niche thing. It's a fundamental change in how people are choosing to invest in assets like gold, moving away from the physical stuff and towards more efficient options like ETFs.
The takeaway: your smart investing strategy. Okay, we have covered a ton of ground. So what's the bottom line? Let's boil it all down into a simple, powerful strategy that you can actually use. These are the golden rules. First, diversify. Don't put all your eggs in one basket. Mix it up. Second, invest regularly. Things like SIPs are perfect for this. They build discipline. Third, be obsessed with low costs. I'm telling you, small fees make a huge dent over time. Fourth, and this one is so important, don't chase past performance. It's like driving while only looking in the rearview mirror. And finally, check in on your portfolio every now and then. Make sure it still makes sense for you.
So I'll just leave you with this final thought. Look, the market is always going to be complex. It's going to be noisy, it's going to be confusing. That's a given. The real key to success isn't finding some complicated secret strategy. It's having a strategy that's simple enough to actually understand and stick with no matter what.